Now let's talk about the latest developments in the local stock market with the CEO and President of AIA Investment Management and Trust Corporation Philippines, Angel Pacis. She joins us live in the studio. Hi, Angel.
Hello, Maiki.
Good to have you. Lots of things going on in the equities side and in the vehicle side for the PSE. A monumental development on the equities front. The launch of a new investment product, the Global Philippine Depository Receipts, or GPDRs. What are your thoughts on this new vehicle?
Long time coming, a very welcome development that has far-reaching effects because it's going to give investors access to more investment outlets. And as you know, the lack of depth and the lack of options has been one of the things that has prevented capital market development.
Agreed. It's a new product on the block, a new outlet for investors. Really excited about this. Talk to us about the benefits of this new product.
Okay. First and foremost, it's actually going to help investors diversify their portfolios, and it's going to give access to smaller investors. In the past, right, only high net worth individuals can easily access investments from abroad, but now it's actually going to be accessible. And what's interesting about it, it's, you know, even the small unsophisticated investor can have access and benefits from these investment outlets through the institutional fund, the local institutional funds.
That's right. Big and small, they're going to get to take a part in this.
Yes.
Speaking of big and small, you think it's the big institutional investors that are going to pounce on this first?
Yes, initially. I'm sure there's going to be a minimum investment outlet, so access is still not going to be readily available for minimum investable amounts. So it's not going to be readily accessible for small investors, but it will be through the institutional funds. And of course, there's also familiarity. There's always the home bias, right? And I think it's just right that these instruments be accessed through the local institutional funds because there will be professional fund management to overlay the investment.
Now, in terms of the companies that are going to be available on these GPDR listings, it's going to be the bluest of the blue.
Yes, it will be the mainstream names because they know that they'll be dealing with investors who are not really familiar and who will not be in a position to really do fundamental analysis for less known names. So it will be the bluest of the blue.
Of course, right. You know, lack of voting rights. There's going to be a lack of voting rights when it comes to these GPDR listings. But that's not such of a concern because it's just a small % of the ownership structure. It doesn't really matter. What are your thoughts?
Yeah, not really because we already know we're going to be too small to influence the voting outcome anyway. So it's really just investors will really just be happy to get access.
And the risks associated with this product, they're going to be Forex risks.
Yes.
Talk to us about that.
All right, because there's going to be, right, if these are foreign denominated, then you have the asset returns plus the foreign exchange component. So that really needs to be emphasized to the investor. And that's also why I'm hopeful that they will access it through institutional fund managers because the institutional fund managers will actually have outlets or mechanisms that will allow them to manage and hedge the foreign exchange risk.
In terms of asset allocation, how much of an investor's portfolio, of course it's different for anybody, do you think how much exposure should they have to GPDRs? Of course it's different. I mean,
yes.
You know, given the changing interest rate environment, you know, maybe in the past that would have been really interesting to be heavy on that. But now, given that interest rates are coming down, things are really looking good for the Philippine economy.
Yeah.
The upside might be here, but balance is always good.
Yes, yeah. Definitely, it will help the portfolio because it will lessen overall portfolio volatility. In the past, we were stuck with a handful of stocks, a handful of investment outlets. So when there are flows in and out, you see very big swings in the prices, up or down. So that's not really good for the investor. So by adding this instrument, it broadens. So the individual movements of the stocks, that the investments that we had before, is actually going to be muted. Now, overall, we are actually more constructive on equities over fixed income. So it's actually good. Now, what we would actually like to emphasize is that, you know, the outlook for developed market equities is actually improving. So in the past 2 years, you know, developed market equities outperformed emerging market equities. But, you know, with the lower interest rates.
Yeah, the tides are changing.
The tides are definitely changing. So I'd really encourage investors to rethink the weighting to developed market, the emerging market equities like the Philippines.
Yeah, bonds are always going to be interesting, but right
Yes.
now, equities need
Over
a lot
bonds.
of consideration
Yes.
right now.
Yes.
Okay, now let's take a look. You mentioned the PSE index. Let's talk about that. Right now, we're up 0.2% to 72.88. Not in bull market territory at this moment. However, the trajectory is still bullish. Talk to us about your outlook for equities.
Okay, we're really actually looking at something like 8,000 at least, although we are expecting from this point on a bit of a technical breather. We are encouraging investors to use the technical breather as a window to catch up. Outlook is very good. We all know that when interest rates are going down, it's gotta be good for equities. But you're seeing a lot of tailwinds for the Philippines, right? Lending, the growth in lending spurred by the reserve requirement ratio cut and falling interest rates is not just going to help banks. It's going to help the economy overall, and consumer demand and government spending, which has actually been stymied by inflation and of course the attempts of the government to improve their current account deficit. That's all gonna go away because rice prices, which ate up purchasing power,
Going down,
it's
rice
going
and
down.
oil because of the tariff cuts.
So that's actually firepower for your consumer, and election spending is actually going to start to happen with election season here. So you have so many tailwinds to support the Philippine economy. And remember, the 6% forecast for GDP next year was there before the RRR cuts.
Speaking of forecasts and firepower for the equities market, September inflation, that's going to be out this Friday. The government expects that to ease further to 2.5% from 3.3% the previous month and 4.4% the month before that. What's your outlook for September inflation?
Okay, we don't see any negative surprise. What's helping the inflation outlook? Rice prices are down. And that's already 7 to 8% of your food basket, which is your biggest component. You had your peso strengthening. You have oil prices going down. So all of those actually support the benign inflation outlook.
So where does that put your outlook for inflation for the full year?
3.5%.
3.5% for 2024, and for 2025?
3%.
3%, so it's headed downwards. In line with expectations of ADB also, they expect inflation to be cooling from now until 2025. That said, expectations for interest rate cuts. We had in the news item earlier, U.S. Federal Reserve Chairman Jerome Powell hinted that the rate cuts in the U.S. won't be as fast and as furious as everyone thought they would be following the supersized cut, right? So how is that going to affect the outlook for equities moving forward?
All right, so it's going to temper the exuberance for the rest of the year, we believe. But the cycle, actually, it's just a pause. The 50 basis point cut was really preemptive, and then they're going to pause to see where the economy is going. But overall, I think they're still looking at a terminal rate of around 3.25%. So that's still around 175 basis points from where we are right now. So the trajectory is still down, just not as early as everybody expected.
Okay. Now, speaking of the trajectory and where we are now, the PSE index is up about 14% year to date. How would you describe where we are now, and what does that tell you about where we're headed?
Okay. It's just the first leg, right? I mean, a lot of things have changed since the forecast. So we are expecting a pause in the next few weeks or months, but maybe test 7,000. But we are looking at something like 7,400, 7,450 by year end, and maybe 8,000 by the first half of next year.
And that's just healthy as the market heads higher with all the positive developments. On the asset allocation side, you said bonds are always interesting, but
for now,
take a focus on equities right now.
Yes.
Specifically, what stocks?
Okay. We're an advocate of index investing funds, so a diversified portfolio. But if I had to pick 3 stocks over a 6 to 12 month time horizon, we'd go for BDO, we'd go for Ayala Land, we'd go for Jollibee.
Interest rate sensitive stocks and consumer stock
Yes.
with Jollibee, given the expectations of a half a percentage point cut by the BSP.
Yes, and the valuations, of course. BDO, of course, we know banks are going to do well, but BDO actually enjoys better valuations with price to book of about only 1.45 2024 and 1.3, and they have lower NPL ratios relative to the rest of the banking industry.
Okay, can you share your thoughts on the peso with us, Angel, given the expectations of lower interest rates both here and in the U.S.?
Okay, temporarily we do expect the peso to depreciate a bit. This is seasonally strong dollar because this is when companies purchase dollars to pick up in inventories for the Christmas season, right? So they build up inventory and necessarily they will need dollars. Of course, also the announcement of the Federal Reserve Chairman that they're going to be pausing a bit and observing interest rate cuts. That's actually going to help the dollar a bit. So, but we do expect the appreciation of the peso to continue towards December. December
is normally seasonally.
Yes.
Yeah. Okay.
When the padala of our OFs come in.
That and all the balikbayan boxes.
Exactly.
Okay, Angel, thank you so much for your time and for sharing your thoughts on the market with us.
Thank you for having me, Maiki.